Hello everyone, it's Dennis here, and today I'm going to be sharing with you one of my best secret strategies. It's a simple hedging strategy that I'm going to be showing you in just a little while here, and everyone can try it out because it's very simple and it really generates profits if you work it out very properly with, of course, your knowledge of the forex market. Okay, disclaimer here is that I'm not a forex coach or something like that, and this video shouldn't be taken as a financial advice to invest in the forex market. So you should seek independent advice from a forex advisor, financial advisor. But what I'm saying here is that this strategy has worked for me, and perhaps you could try it out, as I always share some of my strategies. So if you're familiar with the forex market, then or the stock market, you may well have heard of hedging. And for those of you who are new, hedging is kind of buying and selling at the same time. Now that sounds weird. Yes, buying and selling at the same time, that won't make you any money, and certainly that's true. If you buy and sell at the same time, then let me illustrate this with an example. Let's say at the time of this recording, maybe let's say the price is here. Okay, let's say the price is here, and we just don't know what is going to happen to the market, so we are just at this point. So what do? Let's say you take a buy order and a sell order at that point. So at that point we take a buy and sell at the same time. Now what happens when you take a buy and sell at the same time? Of course, one trade is going to make profits while the other is going to make losses. For example, at this point, if the price increases upwards, that means the buy order is going to be making profits while the sell order is making loss. If the price goes down, then that means the sell order is making money and the buy order is not making money. It's actually in a loss. So when you just set the buy and sell orders here, you're not literally making any profit because all the profits are just cancelling out each other. So you won't be making any money at first. But let me show you how the strategy works. So we have taken our hedge trades here, the buy and sell, and in this example here, actually the market continued upwards. So when the market goes upwards, so all you need to know is just to kind of predict a point where the market is going to reverse, and of course that's where you need to apply your knowledge of the forex market. You may go backwards and maybe draw some trend lines and support and resistance lines that can give you an idea of what is happening. Also, checking the news and knowing what is happening can give you an idea of what is happening. And so let's say you predict that the market is actually about to reverse. Maybe you exit the trade at this point. So if you exit at this point, this is your exit. Let me change this just to make it easy. Okay, yeah, so let's say you exit the buy order at this point. So you are now exiting. Indicate that here. So exit the buy trade. Now what happens when you exit the buy trade? Obviously you have made some money in the buy order that you executed here. In fact, if you had taken one standard lot, this is euro US dollar, the price actually went as high as 2,600, nearly 2,700 plus pips. So that would be $2,700. That's a good amount of money, but that's nothing to be happy about because that's the same amount of loss that you have incurred, including your commission or the spread. So you just have to make sure that you spot just the right time when the market is about to reverse. In this example, as you can see, from the point where I exit my buy trade to the point where the market actually goes high, it's a further 1020 points. So like I said, if this was one standard lot, that means there's going to be a point where you have negative 1000 on your account, because when you exit the buy, then the sell order continues making a loss. So this is going to be an extra loss that you incur. So when using this strategy, you have to make sure you be as precise as you can, using of course your knowledge of the market to see when is the market about reverse. Of course, if let's say you exited the market at this point, then you would be a better trader, and in that case you would make more money out of it. But of course, the reason why we're using this strategy is because we don't even know where the market heads with all this high frequency trading and all that. For retail forex traders can really never be sure who is controlling the market. So that's why I like this strategy actually, because at the moment I enter the buy and sell here, I don't even need to know where the market is going to head next. I just need to take my orders like unconsciously, and I start managing the two orders. I don't need to know what is happening in the market when I'm taking the orders. I just need to take orders blindly kind of, and then I have to make sure I manage them. So part of the management of these orders is to make sure you exit one order when the market is about to reverse. So the market, yes, reverses, and when the buy trade, the sell order, when it comes back to this point, then you are at break even, and then the market continues downwards. So at this point I could have closed my sell order, so that I just take the 1000, that was about $2,700 profit. Oh, okay, something like that. So that's a good profit. I could have closed here, but if you think the market is continuing downward, then you could just leave that sell order to continue running. Or even at this point, you could open another hedge. You could actually make another buy order. I'll cover that more extensively in another video, where you actually just keep hedging your trades and make money, so that you don't have to close the orders and then open other two orders which take up more spread. So if this order just comes back to this point, then you can execute another buy order, and that basically means you still hedged at that point. You just wait for the market. In this case, the market continues downwards, so the sell order makes profit. So again, you just have to make sure you spot the right point where the market is going to reverse. If you exit the market, say at this point, then you're risking, because if you exit the market from here, then this is risky, because the market continues downwards 2,500 points downwards. That's a very big range, and it could potentially blow out your account. So the only loophole to this strategy, this hedging method, is choosing a time when to exit your trade. And I honestly don't have a clear clue or what to give you about when to exit the market. All I have to say is that make sure you combine this with your other trading strategies, like the support and resistance, the ADX to determine whether the market is trending or not, some momentum indicators, any tools that you use to know when the market is about to reverse. Now, one advantage of this method is that you really don't need to, you can take big lot sizes, because it won't be using up any of your margin, since the trades will be fully hedged. But you have to make sure you account for charges like the swap. For example, from here to here, this is a difference of about 7 candles. That's a full week, so you have to make sure you account for the swap. This is a daily chart. You have to make sure you account for the swap for all these midnight charges, so that your account doesn't go into losses because of them. So don't put it at the edge of the capital that you have on your account. Make sure you leave in some allowance for the inaccuracies in determining the reversal points, and also for paying the swaps. But of course, you don't need to worry so much about the swaps, because some of them will be positive, others negative, since these are opposite pairs. So these are opposite trades, sorry. So the swap will really not matter that much although if the trades are to stay for so long, then you may have to consider that too. Okay, thanks for watching this video. Again, comment below to let me know what you think, if you have a better strategy of how we can exit such a trade, or if you have another better strategy of how we can make money out of the forex market. I would be glad to know that with the other members. Thank you for watching, and don't forget to subscribe. Peace.